We have earnings results coming in from Advanced Micro Devices, AMD, on the NASDAQ. Fourth quarter results as follows. Adjusted earnings per share coming in at $1.53 versus $1.09, so that's year over year. The estimate had been at $1.32, so a beat for AMD there. Revenue coming in at $10.27 billion. That is up 34% year over year. And the estimate had been $9.65 billion, so a very big beat for them on revenue. Let's break it down. Data center revenue coming in at $5.38 billion. Again, 39% up year over year. The estimate had been $4.97. Gaming revenue coming in at $843 million, but that's a 50% increase over year. The estimate had been $855. So it's actually a miss on gaming revenue for them, even though it's 50% up. Capital expenditure, closely watched these days, $222 million, so up 6.7% year over year. The estimate had been $231, so less expenditure there. R&D expenses at $2.33 billion, up 36% year over year. Estimate had been $2.16. And the forecast for the first quarter. Revenue they see coming in at $9.5 billion to $10.1. The estimate in between at $9.39 billion, which is coming from Bloomberg. Adjusted gross margins about 55%, and the estimate had been 54.5. Okay, let's break this down with Romeo Alvarez. He's Director Research Analyst at William O'Neill & Co. Thanks for joining us today.
Thank you for having me.
This company does many different things. So what's the key metric for you?
The key metric is the data center revenues that was driving growth for the company. And that's what basically all the analysts, the market is focusing on at this point.
Okay, so they beat on that. The estimate had been under $5 billion. They came in at $5.38 billion. How big of a beat would you qualify this as?
I think it's a very solid beat. It's definitely not the best I've seen within the industry this quarter, but I think it would be enough to justify where the stock is trading and for a potential move higher. I see the stock down in after hours, so maybe some had higher expectations, but all in all, I do think this is a pretty good result for AMD, and the company's beating across all the numbers, whether we're talking about the December quarter or the March estimates in terms of revenues, EPS, and margins. So solid quarter overall.
You can see, as you mentioned, stock down at about 3% to 234 right now. What is the biggest challenge for this company? I know it aims to rival NVIDIA, but what would you say its biggest challenge is in trying to do that?
I think the biggest issue is beating NVIDIA's ecosystem. So AMD, I believe, will have the competitive hardware. They have a new series coming out in the second half of this year, the MI455. But on the ecosystem as a whole, which includes the software, I think that's when NVIDIA still keeps the lead. They have all the main customers. They have the market share. So it's not going to be easy for AMD to take a big portion of that market. I think a bigger issue, and maybe why the stock could be reacting negatively after hours, is the customers. So not the competition itself, because if you look at NVIDIA, it was also down today during regular trading hours. I think it's looking at what OpenAI is doing, Oracle is doing, Microsoft is doing, and all these companies are under heavy scrutiny and heavy pressure due to the high CapEx needs and the financing that requires.
You talked about the competition. Does Intel provide real competition for this country? And they're being affected by manufacturing problems. Does AMD face any of that?
I would want to listen to the conference call to see if they say anything on that front. Intel did admit that they are having constraints when it comes to supply chain on the CPU side, and that's where they compete with Intel. On the AI or GPU side, that's where they're competing with NVIDIA. As of right now, we have not heard about any constraints, supply chain constraints regarding AMD, but I would still want to listen to the conference call to make a statement there.
Okay, have they been able to find new customers? You mentioned that the ecosystem for NVIDIA makes it hard for them to do that. Have they been able to drum up something new?
So the big game changer happened last October when they announced OpenAI as a new customer. And that was a big endorsement in my part. And we saw the stock break into new all-time highs. Since then, the stock has been in a nice uptrend. But I think going forward, I think investors want to see more. Like, what's next? They want, because relying on one big customer, it's still a risk. So I think the market is probably going to be looking for companies like maybe Meta, Amazon, Google, and others, which I mean, it's not definitely easy because there's also the route of companies developing their own chips, like Google with the TPUs. So there is definitely heavy competition there, and that could also be a drag on the stock near term.
You mentioned a look ahead to March, their first quarter forecast, which is 9.5 to 10.1 billion. The estimate had landed in between. What are your thoughts on what they are expecting in the next quarter?
So I believe the big growth will happen in the second half of the year once the new chips, the MI455, is deployed. Near term, I think these numbers are actually pretty good. I mean, they beat on the revenue guidance, which is what we have so far. You know, the numbers just came out. So I'm very happy with the results so far. And I think the biggest catalyst, again, will happen in the second half. And I think that's when you're going to see the growth really accelerate.
Okay, let's leave it there. Romeo Alvarez is Director Research Analyst at William O'Neill & Co. Thanks for that.